Green, and he is the founder of Green and Company CPAs, who is, in my opinion, is the preeminent provider of tax and accounting services for individual and institutional traders. Now, Robert and his team have helped thousands of clients make smart decisions on everything from forming the right trading entity to qualifying for trader tax status and the tax benefits that may be realized through these decisions. So, without any further preamble, it is my distinct pleasure to introduce you to Robert Green and his timely presentation on entities and employee benefits for traders. Robert, the floor is now yours.
Thank you very much. Your mic broke up on me a bit, so if my mic breaks up, let me know. Hopefully my connection is good. Welcome everyone. I guess some of you have been around the whole day. It's been an incredible event, a real Trade-A-Thon. We're really happy. I'm very happy to be part of it. Thank you, Rolly. This is my photo up here at one of the trade shows, and Green Trader Tax is our website. Green NFH is our CPA firm. This is educational. I'm going to give you some great insight on tax savings. But remember, you really should work with a CPA, I recommend ours, in a one-on-one session to get the advice you need. This is just educational. We recommend the services of Green NFH. Please do not record this webinar. TradingPub is recording it and they will make it available. Thank you, Rolly, for talking about my bio. I'm the managing member of Green NFH LLC and also CEO of Green Trader Tax, our publishing firm. We're the leading authority on trader tax according to the media and clients. We have the best-selling Green's 2014 Trader Tax Guide. It comes out every year. This guide is for 013 tax prep and 014 planning. We have the companion examples guides. I write the Business of Trading column for Active Trader magazine, and all these things go back over a decade. The guides, the recommendations, and we've celebrated our 31st year in business this year as well. I also write for Forbes. You'll see us in all the major media when it comes to trader tax. We are the authority. We're the main speaker at the Traders Expo, the Money Show. My partner Adam Manning spoke at one of the TradingPub events when I was in Europe last month, and he covered some of the basics on trader tax status. Well, once you have trader tax status, business treatment, you're trading as a business. Well, when you're in business, what do you want? You want business deductions. You have expenses, home office, education, computers, monitors, trading services, seminars, the works. You want to deduct it all. It's a puny deduction to take an investment expense. So this is kind of the agenda for today. Why traders should consider an entity. Q3 is an excellent time to form a trading entity. Why? Well, if you wait until year end, you have very little time to put in place the strategies we're going to talk about today, like this first bullet point here, second one, arrange deductions for health insurance premiums and retirement plans. So the business deductions are going to save you $5,000, $10,000 versus puny investment expenses. If you're trading very actively, and we're going to, by the way, go back and review some of the trader tax status. But the big picture, this is the agenda for today first. You want to set up your entity now. You want to arrange your health insurance premium, your retirement plan deductions, your business deductions, your accounting. You want to get it all in order now. You're talking about tax savings, $5,000 to $10,000 or more with the business expenses, $2,000 to $17,000 with the retirement plans. And the entity will help you avoid wash sale problems, which can be catastrophic or just timing problems for securities traders. The new entity will give you flexibility on electing 475, tax loss insurance. One of the biggest problems for traders is having a big loss. It happens in a given year. You don't want a capital loss limitation. where you can only deduct $3,000 against your spouse's wages or your wages or any other income. That's the biggest problem with capital losses. They go wasted for years. You carry them over, but it can take a long time to use them up, if ever. We talk about tax loss insurance, the 475 election. Then your losses are business ordinary losses. You can write them off against any kind of income. You can carry them back 2 years on a net operating loss return, whether you were a trader in the prior years or not, and get a huge refund. Trader tax status gives you business expense deductions and the opportunity to elect 475. This last point, it all looks much better to the IRS inside of an entity. Because otherwise, as a sole proprietor, you're using the Schedule C. That draws a lot of attention because it just has expenses. So if you know about trader tax status, entities are best with trader tax status. So let's just step back a little bit and review trader tax status in our Trader Tax Center and show you that business expenses are far better than investment expenses. You need to qualify for trader tax status and assess that first. So go through our golden rules to qualify. Let's take a break from the PowerPoint and jump over to the Green Trader Tax website. Green Company, Green Trader Tax, comes to the same place. We have a brand new website, by the way, coming within a month or so. We have our new stores already. You scroll down here and you click on the Trader Tax Center. A lot of free information here. These are excerpts from the guides. Click on Trader Tax Status. The first step to tax savings is the status. You want full unlimited business expenses. Investment expenses are limited to 2% of AGI. So if you make $100,000, you lose the first $2,000. Then the rest is added back for AMT. If you're in upper income, it's limited with the piece limitation, and many states knock it out. And investment expenses don't include education and home office. Investment treatment is for the birds. So here's how you qualify. You have 1,000 trades for the year, 500 round trip or 1,000. Trade full-time or part-time, mostly every day. Spend over 4 hours a day. Few to no sporadic lapses. Execute trades on 75% of available trading days. Mostly day trades and swing trades. Intention to run a business. Make a living, not your primary. Significant tools. Automated trading, when others make the software doesn't count, an outside manager doesn't count. I'm not going to waste too much time on this because we covered it last time and it's a whole other webinar. Let's assume you passed the test. You have the trader tax status. So now you want an entity. What kind of entity do you want? So we're sitting here, you're going to maybe contact me tomorrow or next week and you want to talk about what entity is best for you. And ask you what state you're in because that affects entities. Now keep in mind, a trader can form, and I'm going to go through the PowerPoint slides here, a trader can form an LLC, that's a limited liability company, a general partnership that has no liability protection, or an S-Corp as a trading entity vehicle. Now, technically, you don't form an S-Corp. You form either an LLC, partnership, or C-Corp, and then either of those three makes an S-Corp election. A few states don't allow a general partnership to make an S-Corp election. We generally like to form the LLC and make the S-Corp election. That's your best trading entity vehicle. However, in some jurisdictions, it doesn't work. New York City doesn't acknowledge the S-Corp. So you need two entities. You need a trading partnership, general partnership, That's your trading company, and it pays a administration fee, a management fee, and a share of profits to a corp, to a C corp, and the C corp is your management company. Why would you need a management company? Because that's where you do your employee benefits. Prior to this year, we could accomplish the main employee benefits, which are a retirement plan and health insurance premiums. Again, remember, there's $2,000 to $17,000 of savings on the table or more for the defined benefit plan. Big savings. Plus you want to save for retirement, and you want to trade those accounts tax-free until retirement. So, in the past, you could just get by with a simple general partnership. Starting this year, we want the S Corp. If you're in a state that's friendly to the S Corp, that's all you need. If you're in California, who has a 1.5% franchise tax on S Corps, and you're trading a lot of money and you're going to make hundreds of thousands, we want the two entities, the Trading General Partnership and the S Corp Management Company, so that we limit that franchise tax. So in 90% of our client cases, they just need the S Corp. And in California and New York City, where we happen to have a lot of clients, you might need the two entities. Now, what's nice about the S Corp is if you're single, you can form a single member LLC, which by default is disregarded entity, it tax nothing, and it elects S Corp status. So this is what we're focusing on today, really getting into that S Corp tax return. Now, a C Corp, which is a corporation by default, that's a bad choice for a trading business. Losses are stuck on the entity level. You want your losses to pass to your individual tax return with ordinary loss treatment to get those huge refunds. You don't need losses stuck in a C Corp, plus there's no $3,000 allowance each year as well. There's no lower 60/40 tax rates for 1256 contracts, futures. So the C Corp's good as a management company, but it's not good as your trading entity. New traders and existing traders are interested in forming an entity to house their trading operations separate from other activities. You don't want to combine it with your consulting business. If you're in a C Corp and you have treasury available to you, you don't want to trade the C Corp's treasury funds. You'd rather pay yourself a salary, get some money out of the C Corp, and house and conduct the trading activity in its own vehicle, separate and distinct from your other activities, including segregation from your investments. My blog yesterday talked about how important it is, and I stressed what we've said all along, that your investments need to be segregated from your trading. In the 3 tax court cases that people lost this past year, Asadaragi, Nelson, and Endicott, that we wrote about on our blog, they were investors with significant stock portfolios, and they hyperactively traded options around their stock positions. They would have been better served to set up an LLC with an S Corp election for their active trading, so that there would have been a disconnection. The entity has a different EIN. It's disconnected from the individual, and that is so important. It helps avoid wash sales. It helps win trader tax status. It helps with not having problems with 475 in your segregated investments. So think about housing your trading activity in a separate and distinct entity. Don't have any subsidiaries and holding companies, just a separate entity. The entity is great. It makes it easier to open, maintain, and close the trading business activity, and it delivers more tax breaks. And I think I just covered some of those points about why it's so important to house it separately. Now, tax breaks for an entity are not automatic. Entity needs to qualify for trader tax status, trading enough to claim business treatment. You set up the entity next week. You really get it, let's say, ramped up by the end of this month. You're actively trading for 4 months. You need to make 4/12 of that 1,000 trades for the year. It's annualized. So the entity is going to need to qualify for the trader tax status. Otherwise, it's an investment company. Now, investment companies, as opposed to a trading business company, they have some benefits in some client fact patterns, but not all. They have some convenience, but it's not a slam dunk to do it. And you should check with us to crunch the numbers. For a trading business, it's almost always a slam dunk to do it. We'll go more into that later on. Remember, most hedge funds, they're limited partnerships or LLCs. They could be huge operations, but they have investment company tax treatment. That's why they want profit allocation carried interest, because if their investors had to pay very large incentive fees, the investors would get stuck with investment expense deductions. And if you make a lot of money every year, the type of person who invests in hedge funds, accredited investors, that 2% limitation is very high, and they're usually in the AMT zone. So hedge funds deal with some of those investment expense problems by using carried interest, profit allocation, and President Obama wants to repeal that. He's had it in his budget every year. And if there is going to be tax reform, that could be one of the first things on the cutting room floor. Although you never underestimate the power of hedge funds to keep tax benefits in their favor. But for you, you don't really have that opportunity to do carried interest. You're the trader of your own fund. So the trader tax status is your ticket to success. For the trading company, form an LLC or general partnership. We suggest an S Corp election. I already kind of covered that. If you're in a state where the LLC is expensive, in New York State they have a publishing requirement. It's like $1,400. So we would form, if you're outside of New York City, we would form a corporation and elect S Corp status, because that's the traditional route to S Corp status. If you're in New York City, we would form a general partnership, and the S Corp, you would own 99% of the general partnership, and your S Corp would own 1 to 5%, depending on how much income you want in the S Corp. Why are you concerned with what income is in the S Corp? The S Corp needs income to finance the employee benefits. That's, remember, the goal here. The goal here is to have compensation in the S Corp, salary, officers' compensation, that unlocks the health insurance premium deduction. Could be $12,000 a year, could be more, less. And an individual 401k, which is $17,500 for the 401k, $5,500 more if you're over age 50, and 20% profit sharing plan taking you up to $56,500 if you have the catch-up provision. A defined benefit plan, you can contribute $215,000 a year. These are big potential deductions. So we set up the entity structure to to get the amount of income that we want in the S-Corp if it's a dual entity. And I covered this already. The S-Corp structure isn't good in some places. If it's not good, like in New York City or California, we add the management company, the second entity. An S-Corp or C-Corp is the minority owner, and the LLC or partnership is the trading company. Now this reminds you of the hedge fund structure. That hedge fund investment company has investment tax status. The overhead of the management company could be millions of dollars with staff and computers and offices. Well, they deduct all that against the management fee. The management company is in business as an investment manager. That's a business status. So they put most of the expenses onto the management company rather than on the hedge fund. You're not going to get caught up in that. It's a lot simpler for retail traders. Oh, sorry, I jumped. 1 second, I think I jumped ahead here. I think I had skipped the slide. I apologize. With an S-Corp or C-Corp, the trader receives salary, unlocking the deductions with a high deductible retirement plan and health insurance. You work with one of our CPAs if you work with us. We have arrangements with paychecks.com. Our own assigned agent there. We set up a simple payroll in December we see how much your income in the trading business is for the year. That's why it's important to get started now. Let's say you want to do a full retirement plan deduction, a health insurance premium deduction for the whole year. You could have had your premiums from January to December. That salary in December is going to take care of the whole year. And you could put some tax withholding through there as well that pays your instead of paying estimated taxes. So you could hold off on some of your estimates during the year, not knowing whether you're going to be highly profitable or not, and catch up with the payroll withholding. And that's a loophole. It's treated as being made the whole year, so you avoid the underestimated tax penalty. The whole payroll costs $600. You don't need workman's comp as an owner trader. Federal unemployment insurance is just $42. You probably don't have to pay the state as an owner either. It can be very low cost with the payroll service, and you get those benefits of the taxes being treated for the whole year. So you work with us at year end in November, December. We put this in place. Now another thing is, and if you lose money, you don't have to make any payroll. Now you may want to have a small payroll just to cover the health insurance deduction, and that's okay. An entity helps solve the wash sale loss problem. If you enter, so you take a loss on a security. This is on securities, not futures. Futures are marked to market in 1256. So mark to market renders wash sales a moot point. So if you elect 475 on securities, you're marked to market. Wash sales, you're exempt from wash sales. But if you don't have 475 or 1256 in securities, take a loss on Apple stock today, and you re-enter an Apple stock or Apple option, because the rule is substantially identical positions. Remember, your broker only reports it on the same symbol. They don't do substantially identical. That's why your 1099s are not that helpful to you. And you need your own software, TradeLog, because TradeLog calculates the wash sales between stocks and options. So here you are. You took a loss. You got back into a substantially identical position, the stock or the option of the same stock, Apple stock or Apple options, 30 days before or 30 days after. The IRS says, wait a second, buddy. You're taking a tax loss that you want to deduct in your tax return, but economically, you got back into the same position. We don't want to let you deduct the loss. We want you to defer the loss to that next position you got into. Well, you've been trading all year. Apple, the whole year. You've been losing money a lot. You got this huge built-up wash sale. No problem. Break the chain with an entity. By stopping as an individual and continuing in a new taxpayer entity with a new taxpayer ID, you have divorced and broken the chain. Effectively, you stopped trading Apple as an individual well before year end. There are no positions held individually at year end. That means there's no year end wash sales. And then we can consider a 475 election in the entity within 75 days of inception. That's one situation with wash sales. Another one, and more catastrophic, listen up here. If you trade in IRAs, Roth, rollover, or otherwise, they're connected to your individual taxable accounts. You have to do wash sales across all accounts, your account, your joint account, your spouse's account, if you're filing jointly, you and your spouse's IRAs. Trade log does that. If you are forced to move a loss from a taxable account, a wash sale loss, into your IRA, heads up, you'll never get that loss benefit. That won't change the funds you take out as a distribution, and that's what you're taxed on in an IRA. There's no basis adjustment for those wash sales. They're permanently lost. It's catastrophic. If the client comes to me and says, Bob, I have a huge IRAs, I have taxable accounts, I trade them all the same things, I don't have trader tax status, what should I do? Definitely form an entity, because let's at least divorce your taxable accounts from that IRA so you don't have that catastrophic problem. Now, forming a, remember I said there's more tax treatment flexibility with the entity. It's easy to open, it's easy to maintain, it's easy to close. What do I mean by that? You can make a new election for 475. You can exit the trading business and get the rest of your startup costs, and also, if you don't continue it, it's not a technical closing, you really close it, and also suspend mark-to-market. So forming a new entity after April 15th gives you a new opportunity to elect Section 475 mark-to-market accounting for ordinary gain or loss treatment. That's that tax loss insurance, an exemption from wash sales. Now, this is important because the individual election was due April 15th. Many of you didn't realize that. You didn't make it. Or maybe you didn't want to make it because you had some capital loss carryovers to use up. What's beautiful about the entity is that you have 75 days to make the election or not. So if you have a capital loss carryover or a year-to-date capital loss, and you make money in the first 75 days of the entity, you skip 475, you wait until the next year. So you have capital gains and they're tax-free. Flip side, you lose a lot of money in the first 75 days, even if you had the capital loss carryover. You want to set up, you want to make the 475 election, then you could have a do-over entity. It's beautiful flexibility. I really go through that more in the Green's 2014 Trader Tax Guide. Or, second bullet point, it gives you an opportunity to get out of using 475. If you elected it in the past and for some reason don't want it anymore, you want capital gains to use up capital loss carryovers or current year capital losses. Or you're just not going to trade anymore. You just close the entity and you're out. As an individual, it hangs on your back. You can't use it while you don't qualify, but it's suspended. It's so much cleaner with the entity opening and closing. Now that we went through those slides about the entity, let's just take a break for trade, and so you'll just have double the cost. If you live in California and you know you're moving out, sure, you can form it in Delaware and then move out of California. So again, there's no one size, one plan fits all. It requires some good advice from us. And we take into account all the state tax strategies, tax rules, minimum taxes, franchise taxes, so that it's a winning plan. And we lay it all out for you. So there's a lot involved. When you speak to your local attorney and they understand what we do, they'll recommend that you use our service. Now, if you work very closely with your local attorney and you have quite complex trusts and other agreements, then we'll recommend that your attorney do the legal paperwork and we will guide them on what we want, as opposed to using our outside attorney. So that comes up in some cases too. All right, let's get into retirement plan solutions. Now again, why did you need the entity? I mean, if you were an unincorporated consultant with a Schedule C, your income is on the Schedule C, it's self-employment income, SEI, and you can have a SEP IRA, a self-employed person IRA, you can have an individual 401k, you can have an IRA, you're good to go. But the sole proprietor trader doesn't have self-employment income. And retirement plan contributions can only be made if the taxpayer has self-employment income, SEI, or compensation, like wages in the S Corp. Trading gains aren't SEI or compensation. There's one exception below. Traders use entities to financially engineer the compensation, and it works best with trader tax status. Only in very few cases where you're getting maximum investment expense benefit can it work okay, not great, with an investment tax status. Now the exception to this is futures traders who are full-fledged dealer members of options or futures exchanges. Their individual futures gains are considered SEI. So if you come to me and you say, Bob, I'm an individual member of the CME, a full-fledged membership, not the electronic corporate membership, which is a limited membership, but a full member, because we believe that the ECM, electronic corporate membership, the limited membership, does not trigger this code section 1402I. The full membership does. So that individual trader who's a member of the exchange, his trader tax status is probably unassailable, and he's got already earned income. He may not need the entity. You might even want the S Corp to reduce some of that self-employment tax, because there's investment managers also use S Corps to reduce self-employment tax. They start with the glass full and they want to reduce it. Traders start with the glass empty and they want to fill it up, coming at it from a different opposite direction. Now, whether a trader wants to trade in his retirement plan, good idea. Build it up with annual tax-deductible contributions. Good idea. Borrow money from it to start a trading business. Convert it to a Roth IRA for permanent tax-free buildup. Or take early withdrawals with fewer tax pitfalls. Now, forget this last sentence there. That's to advise accountants. You need to be on top of these rules to know how to do all of those things. And there's a lot of pitfalls around the corner that you need to be aware of, because you don't want to blow up your IRA and have it all become taxable. A lot of traders do things that could blow up their IRA and they don't even know it. Now, here's how you do it right. You consider an individual 401k and plan loans. Generally, the best retirement plan choice for business traders is an individual 401k plan. It combines a 100% AGI, adjusted gross income deductible. That's right from gross income, not below the line like those darn investment expenses. It combines that elective deferral. That's where the tax juice is, the most tax juice, because it's 100% deductible, the $17,500. And on top of that, it includes the 20% profit sharing plan, where you're only deducting 20% against your income. And the income is the salary. And remember, your salary brings up payroll taxes, FICA, and Medicare. It's going to your credit for Social Security. But the 17.5 deduction, you may be deducting at 40%. So that's a huge deduction, $3,500. Well, more, excuse me, more than that. So the point is that you're going to save a lot more in income taxes. And you're going to also deduct your health insurance premiums for another $12,000. If you look at the math in our guides, we should have some of this math, by the way, on the website. Let's take a look at that. Back to Trader Tax Center. The retirement plans. Some of the math is probably right here, and it's certainly in the guides. So it will show you the $2,000 to $17,000 of savings of income taxes over the payroll taxes. That's net money in your pocket. Now, if you're over age 50, there's a $5,500 catch-up provision. Just give me a second on something. Okay. Now here's another key point. Let's say that you want to start a trading business and you don't have enough money to do it. You need $25,000 to be a patent day trader in securities. A lot of people don't have that kind of money, so they might go into futures or forex where you can have a smaller account size and more leverage. When you trade securities, it's 2-to-1 margin. If you're a patent day trader, it's 4-to-1 intraday. So you need the $25,000 to be a day trader in securities. Suppose you don't have it, but you got the money in your IRA. Well, what we recommend in the Green's 2014 Trader Tax Guide, in the chapter on retirement plans, is that you roll over your IRA, $100,000 of IRA funds into an individual 401k, then borrow $50,000. You can't borrow money from an IRA, but you can borrow money from an individual 401k because it's a qualified plan. You can borrow up to the lower of $50,000 or 50% of plan assets. So if it's 100, you can borrow 50. If it's 80, you borrow 40. If it's 120, you borrow 50. You can use that money to finance your trading business. Now all of a sudden you're in business. You have all your business deductions deducted in your trading business. Conversely, if you trade your IRA, you can't trade it with 4-to-1 leverage. You can't have a margin account in an IRA. The fees are going to cost you more. And you're only, at best, going to be able to deduct investment expenses in your IRA through an intermediary. Now, many leading brokers offer individual 401k plans on a cookie-cutter basis. That means free. They got it all ready to go. You call up Fidelity, TD Ameritrade. TD Ameritrade has the plan loan. And they even have a Roth Mini 401k feature. That's a good one, the TDA. They have a good department. And they allow direct access trading. Now, stay clear of trying to open a margin account for securities trading, as that can trigger what's called a prohibited transaction. And that blows up your IRA, meaning that it all becomes taxable and subject to penalties. Now, if you're a high-income trader making $500,000 a year, consider a defined benefit plan. The individual 401k is a defined contribution plan. You're defining the contribution at $17,500 plus the 20%. That's the defined contribution percentage. With a defined benefit plan, you need to work with an actuary, plus about $1,000 a year. You might need an attorney to help draft the plan, costing around $5,000. You brokers may have a cookie cutter that you could tweak. But you want to make sure the plan is well written for you and compliant. Don't cut corners. But what does that mean, define the benefit? What it means is you're a baby boomer, you haven't saved enough for retirement, you need X amount in retirement for your lifestyle, you're way short, you have to contribute up to the max, $215,000 a year perhaps, to catch up. And with interest rates being so low, it helps increase what you have to contribute because they can't count on a lot of growth in the plan. You can contribute $215,000, have a deduction, and your salary could just be $85,000. You pay 15.3% payroll tax on $85,000, and you get a 40% income tax deduction on the $215,000. Wow, that's huge. Here are some do's and don'ts on using your IRAs and other retirement plans. And read our blog on this, and also making alternative investments with your accounts. Alert. There's a lot of snake oil salesmen out on the internet selling all sorts of schemes, checkbook IRAs, IRA-owned LLCs. And brokers will tell you, hey, listen, you can't open up a margin account in your IRA. Why don't you go to this company over there? They'll set you up with what you need, and then you come back to us and open up an LLC account. They don't care. It's not their problem. And the firm selling you this stuff has not vetted it fully, or they're being overly aggressive because, hey, that's their business on the internet. Read our content. Doesn't work. Preeminent attorneys have shot it down. The IRS could bust this with a vengeance anytime soon. We've built a reputation on being aggressive in some areas but conservative in others, but always following the law and using good judgment and keeping our people safe. So I hope you heed our advice here too. And we have another way to do it. The individual 401k qualified plan loan. That's the way to do it. So many traders may be triggering IRS excise tax penalties for prohibited transactions, including self-dealing, or UBIT taxes, that's unincorporated business income tax, unrelated business income tax. So in other words, you're carrying on a business, margin interest is considered UBIT. That's why all your U.S. pension funds don't invest in U.S. hedge funds. They go to those offshore funds because they're C Corps, they're UBIT blockers. You have to be careful with this too, because you don't want to do it in the wrong way. You want to spot these schemes early and avoid them. Check in with me on it. Read that blog on it. Don't blow up your IRA. What you should do is consider a Roth IRA conversion. It's wise for traders to consider Roth IRA conversions. Get permanent tax savings on your trading income. Now, when you trade an IRA, a rollover IRA, a 401k, any retirement account where you have direct access and making investments, where they're being made for you, it's a timing benefit. It's deferral. Some people call it deferred compensation, because when you retire, you're going to take distributions, and they're going to be taxed at the ordinary rate that's in place at that time. Historically, rates have been low, so they're probably going to be what they are now, or maybe even higher, when you consider the deficit and where we stand right now. So you're allowed to take distributions at age 59 and a half in an IRA. If you take them before, there's a 10% excise tax penalty. So the IRS is going to slap you with a penalty for putting your hands in the cookie jar before your retirement age. By the way, in a 401k, in an individual 401k, the age is 55. You get a shot at your money faster. Avoid the penalty. You could roll over from the IRA to the individual 401k to do that if you're age 56. You need the funds for living or to finance the trading business. But again, the distributions are taxable. Even the Roth conversion, the distribution is taxable. But with the Roth, you're age 40, you do the conversion, you take the distribution, you put it, turn around and put it right into the Roth IRA. That's a conversion. What the tax break is that there's no 10% penalty. That's the tax break. That's great. So you're basically checking out from the restaurant after your appetizer. Check out, pay your bill, and then you eat your main course, and you don't pay for it. You never pay for the main course, because you build up that Roth over a lifetime tax-free. It's permanently tax-free. The distributions aren't taxed. Wouldn't you think that traders could do better with that than most other people? It's their business to know how to build those accounts. You don't need trader tax status in those accounts. You can just invest too. Now, when should you do the Roth IRA conversion? Come to me and say, Bob, I just left Wall Street. I had a bonus. Really high. I'm in the highest tax bracket. And I'm going to start my trading business. Should I do the Roth now? I'm living in New York City. No. Why not wait till next year when you don't have any bonus? You're in the lowest bracket, and maybe you're moved to Florida, where there's no state taxes, and do the conversion then to soak up the lower tax brackets and in the lower tax state. So you want to bust up your IRAs into pieces. You have 300 in your IRAs, you want to convert 50, you bust up a $50,000 piece and then convert that whole piece to the Roth, because you can't convert part of an account, you got to convert the whole account. So you work with us towards year end, we figure out what tax brackets you're in. Why get you into the highest bracket? Why not just take advantage of the lower brackets? Also, let's say you have a big trading loss with 475, it's an ordinary loss. You're at minus 200,000. All your itemized deductions are either wasted or carried over because you have negative taxable income. You're wasting some deductions. You're not taking advantage of the lower rates. You're not thrilled with doing an NOL carryback because you don't want your trader tax status is a little questionable. Why not do the Roth conversion to soak it all up and get the IRS off your back and really get the most bang for the buck out of it? So you do it before year end. You go ahead and you do it. And guess what? You can recharacterize if it doesn't work out for you. What do I mean it didn't work out for you? You convert 300,000. You pay taxes on 300,000 with your extension. You do it this year. On April 15th, 015, you pay your 014 extension. You pay your taxes for the conversion. You're on extension until October 15. In 2015, or starting after you converted, even for the rest of 014, you went ahead and lost 100,000 out of that 300. Then you say to yourself, why did I check out on 300,000? And now my account's down to 200,000. We just recharacterize it. We get to do a do-over. We get to reverse the whole thing. Now there's other employee benefits. A big one is health insurance premiums. Just like with a retirement plan, you need self-employment income or compensation. Individuals deduct health insurance as an adjusted gross income deduction. They need self-employment income. If you have an S-Corp, you can achieve the same thing. It's a little trickier. You can have your S-Corp pay the insurance. If you want, if it's an entity level group plan or you pay it, you just add the money to your wages and then you have your AGI deduction. So it's a little tricky, but comes out the same. Now remember, with the Affordable Care Act, the insurance mandate started January 1st, 2014. You had to get enrolled on an exchange or otherwise. The open enrollment period is closed now, but if you have a new job, like a new trading business, it reopens for you, I believe. You get your insurance. Now, there's a penalty if you don't get it. It's a low penalty for this year. It's 1% of your household income or $95, the higher of. You made a lot of money, it can be a decent amount. Jumps up next year and then the year after. So you're probably going to get your insurance. It's a good idea to have it. Hey, if you didn't make much money, you probably got a great deal on the exchange. If you didn't make much money on your 012 return, or if you knew 014 was going to be bad. You probably got a great deal on the exchange, and you might have an adjustment for a clawback if 014 works out good for you. We'll have separate webinars just on those Obamacare insurance taxes, and we've had them on the Medicare, the Obamacare 3.8% Medicare tax on unearned income, the net investment tax. We've had a lot of content and webinars on that. Get your insurance, but get the deduction. The deduction, that's one of your best subsidies. Probably is good or better than what you get on the exchange. You want the deduction. Now there's other employee benefits too. It's hard to arrange other employee benefit plans with pass-through entities like the S-Corp partnership. You can't do them on more than 2% owners, and attribution rules apply with your spouse. So even if you make your spouse 1%, it doesn't work. Now, if you happen to be the type of person that has a lot of health costs that are not covered under the Affordable Care Act, and remember the Affordable Care Act, one of the big benefits is that they have to cover so much stuff, they can't rider out a lot of stuff. You got to cover it. But if you have a condition that's not covered in your state, and you're spending $10,000, $20,000 a year of unreimbursed medical expenses, you may want to have a medical reimbursement plan. And then you need the C-Corp. No big deal. Remember we told you, we can add the C-Corp as a management company. It works nicely. You can have a trading partnership in the C-Corp management company instead of the S-Corp management company. Now there are other types of cafeteria plans, flexible benefit plans, education, adoption credit. If you have special needs, you talk to us and we can see if it's something that we want to factor in. There's always costs with it. There's legal fees. There's maintenance fees. They may not work as good as you think. There are lots of limitations. Could be 5,000. If there's limitations and there's a lot of cost to it, it may not be worth doing. So let's always look at the cost, benefit. We like to keep things simple. No trader tax status, probably be an individual. Trader tax status, probably an entity, but you may not even need it. You might have your health insurance, your retirement plan through your jobs, through your spouse. You might be a slam dunk on trader tax status. You may already have 475. Let's start simple, low cost. See what your needs are. And if there's a compelling reason to do something, well, we know what all the costs are, the setup and maintenance, all fees included. Let's look at the cost benefit together. So if you want to form an entity, consider our entity formation service. Start with a 20-minute consultation for $99. It's on promotion. Next, you purchase our entity formation service. The basic service is $347. We also have those packages. Basically, you're getting the $99 back free with this promotion. It's adjusted in the prices. The outside attorney service, $225. Why so little? Because we've laid it all out for them. The online incorporator, $99. The state filing fee, $100. All told, it's $1,000. Takes a week. We have great packages, accounting and tax compliance included. So check out those promotions, the 25% off the guides in the guide store. Use this link. The TradingPub is an affiliate of ours. Use this link. That's why we have great deals. And then for the green end of the page, just go directly in our store. We don't have affiliates there. We have 33% off the trade log accounting, the $99 credit 20-minute consultation, the 15% off entity formation packages, 25% off GTT tracker. So contact us. I handle the consults and entities, most of them, almost all. And then my partner, my co-managing member, Darren Neuschwander, takes over on all the compliance, preparation planning, Mindy's, and customer support. So let's look at some questions on the board. I believe we go to 8:30. We have close to 8 minutes left. Mindy, any questions you want me to answer? I don't know if you have a mic, but otherwise put the questions in for me, Mindy, if there were some for me to answer. If Mindy's still with us. Someone said the solo 401k or solo Roth, that is the individual 401k. Mindy will text in a couple of questions for me to answer now. She doesn't have a mic. And I'm glad you're here, Mindy. So I'll wait for Mindy to do that. Text them in new, Mindy. I'm looking at the bottom only. It's hard for me to scroll otherwise. So Mindy will do that. Let me now. So if you look on the site a little bit, everybody. Check out the webinars. There's a lot of recordings here. You want to go through these recordings. We had entity key updates. We have a lot of good recordings. Check out the blog. A lot of really important blogs on stuff that you need to know. So Mindy, do we have any questions for me? Everybody, if you got a question that wasn't answered by Mindy, quickly text it in, even if you had it in there before, because I'm looking at them scrolling. It's hard for me to scroll up. A TJP, is it legal to trade futures in a 401k? Yes. You can trade futures or Forex in some cases too, because futures have notional leverage. It's not UBIT. You have to have a broker that allows it. But go back and see our do's and don'ts. Mindy had a question from AR. Are you already employed? If you are already employed and do part-time trading and manage to make 1K trades a year, can you still qualify? Yes. And by the way, if you do the payroll, you can do the profit sharing plan on top of the elective deferral of the 401K that you did at work. And you don't have to worry about the FICA because you already maybe paid the maximum in your job. So it can all work out nicely for you. Everybody, get your questions up again for me if you want me to answer them, if Mindy has not. Mindy can't cut and paste. AR, if you already have a brokerage account and need to transfer that account, yes. If we set up an entity, you're going to need to open up a new entity account, not transfer in open positions. That complicates things. So the trades you have year to date might qualify for trader tax status as a sole proprietor. And I just covered education expenses on the webinar that we had earlier this week. So basically, you spend the money on education in March. You start your trading business within 6 months. You can capitalize that as a startup cost. Let's say you spent the money on education in May. If you set up your business this month, you can capitalize it. We go back 6 months, capitalize Section 195 startup costs, and then expense it in the entity. Okay, I'm trying to get to not multiple questions, but second ones. Dan Z, the IRS rules for trading options. We cover that extensively in our content. It's harder to qualify for trader tax status because you're not day trading every day. You got to get to the 1,000. You can't count the expirations, and your average holding period needs to be under 30 days, and you still got to get close to the 4 days a week. So you may want to hyperactively trade a little bit more, maybe some securities too, or some futures. All right, it's a little hard for me to scroll up. Let me see if I can expand my question area here. So get your questions in fresh for me. Oh, good, I was able to expand it a little bit. That's good, okay. Scrolling back now. Non-U.S. citizens, if you're a U.S. resident, if you're physically resident in the U.S., it all applies to you. Non-resident aliens can open up a U.S. brokerage account, and it's not trader business income in the U.S. It's tax-free. They may have dividend withholding or partnerships. Check that in our tax center. So if we set up your entity AR in Q3, we can look back 6 months to capitalize startup costs, or we can use trader tax status for sole prop year to date. I'm scrolling around quickly to try to pick up some questions here or there. Now, by the way, if you open up an entity trading account, almost all the brokers allow you to pay the non-professional data fees. They absorb it somehow because technically entities should be paying the higher rates, but you don't really have customers, so that the vendors, in the past, they've cooperated on that navigation around the rules. Interactive Brokers is pretty strict about it. They want the higher professional rates. But then you can get your data somewhere else or on an individual account. So it's usually not a problem. Sorry if the sound was a little garbled, everyone. I don't think, since we had a big rainstorm here in Connecticut, the internet was that good. Let's see if there's some more questions. Just about at 8:30. So in most states, yes, Dave Al, the S Corp is the simple way to go, either through the Corp or the LLC. We set it up. Someone asked about the Nadex binary options. I just wrote a groundbreaking blog on that. Nadex says it's 1256. It's not. They have no position for that. Read, in our opinion, read our blog. We're not treating it that way for our clients, and sometimes it's a lot better to use 988 ordinary loss treatment if you're trading the Nadex binary options on currency pairs. So read our blog. When it comes to tax treatment and there are questions, the place to turn to is Green Trader Tax. That's our mission, to cover it. Let's see what other questions we have. So again, the entity is going forward. We have to deal with what to do in the past. That's why it's so important to not just sit on your hands and wait. Get in with me. Give Mindy a call. She'll get you scheduled with me. Just purchase the 20 minutes, $99. You then get access to my calendar. You book your appointment. You have it with me. We're good to go. You get a nice memo after that. So if you're a non-resident alien, you do have the dividends tax, the withholding on that. There's nothing you can do. Someone asked about that again. I'm not sure if there was anything else. It's 8:28, so here's the story. Give us a call. Read, spend some time on our site. You can click for a schedule some time with Mindy to learn how to use our site, how we can help you. Get Mindy on the phone. She might be on the phone with someone else, so leave a message, she'll call you back. Do the 20-minute consultation, that's in the store. So you go to the home page, click on the store. Go in the store, you'll see some of the promotions. Go to the store, consulting. Now, by the way, Mindy, I assume you put in the link for buying the guides in the guide store, the 25% off. Once you get the consultation, go for this 20-minute promo. So thank you, everybody, for coming today. Thank you to Rolly White, to Yana, to Trade-A-Thon, to TradingPub. We were thrilled to be here. I'm here over on the left, Nara Nushwanda here in this photo, Adam Manning. We look forward to working with you all, and have a great, the next session's supposed to be fantastic. Good. Thank you for including us, everybody. And we hope to hear from you soon.
Well, thank you so much, Robert and Mindy, very much for your presentation and making us aware of the benefits that may accrue if you qualify for trader status and form the appropriate entity. I know that this is firsthand that this is a tricky area that's not well documented, through the IRS, and I can personally vouch for the value of your services and the benefits that have accrued to me as a retail trader when you helped me form my husband and wife general partnership here in Texas. I also appreciate the special offer that you, Robert, have put together for the members of the Trade-A-Thon here, and I recommend that each and every one of you get well acquainted with Bob's site and take advantage of the wealth of material that he has put together on the site for you. This is an area that sometimes we can be so focused on trading and strategies and techniques and things of that nature, but it's a business as well, and Bob and his team can be extremely helpful in helping us make the right decisions early on as to how we want to treat our business. So once again, Bob, thank you so much for coming in. Mindy, for fielding and answering all the questions as they were pouring through the question panel there. Excellent presentation. Well,
Thank
folks,
you.
I'm pleased that, Robert, obviously, just once again, thank you so much. And I do want to, pleased to say that we are running the trains on time. We're exactly on schedule. And our next speaker will be joining us here shortly. Anka, this might be a great time to do a mic check to make sure that we can hear you well. And also maybe you could all project your opening slide there so we can make sure the projector is working correctly.
Hi, Rolly. Sound check, please. Can I please have a quick sound check? Just want to make sure the sound is coming through loud and clear.
Anka, you sound great.
Okay, perfect. Thank you so much, guys. So excited to be here today.
Oh, yeah, and I see your slide there, so I have a brief little intro to do for you, and then I'm going to turn the floor over to you. So, folks, our next speaker is Anka Metcalf, and she is the founder and CEO of TradeOutloud.com. Now, Anka has been active in day trading and investing since 2003, and she trades different asset classes, including equities, forex, and futures, with an emphasis on stocks and forex. Now, over the years, she's translated complicated technical and analysis patterns into simple, understandable, applicable methodology that can help traders succeed at a fraction of the time and become consistent traders by following her approach to trading. Anka has a master's degree from the Academy of Economic Studies in International Transactions and Stock Market, and has earned numerous certifications and specializations from financial institutions, top trading and investing companies in Europe and the United States. And for these reasons, it is my pleasure to introduce you to Anka Metcalf, and her topic this evening will be fast-tracking your trading with one simple strategy. And with that, Anka, the floor is now yours.
Thank you so much, Rolly, for the nice welcome here, and thank you so much, guys, for sticking around. It is 8:30 Eastern time here, and I know that you have to take time to attend these events, take time from a wonderful, wonderful summer. Well, it's kind of cold, chilly. It's kind of chilly here in Detroit, Michigan, so for the Midwest, it's actually pretty cool to be inside and kind of like listen in on these presentations. And by the way, Robert had an amazing presentation before. Okay, so thank you so much, guys, for being here. Thank you so much, TradingPub, Rolly, and Yana. Thank you, guys. And I am here today to share with you the one strategy that